Welcome back to the Daily Factor. Well, I'm glad to say we have PETRI REDELINGHUYS back. Of course, PETRI is from Herenya Capital Advisors. PETRI, good afternoon, and thank you so much for joining us.
Good afternoon. Thank you for having me. Sorry for my absence this week.
Listen, I tell you not, absence makes the heart grow fonder. PETRI, I'm going to leave it up to you to give us our market updates for today.
Right, so I'm going to sort of try and cap a little bit in because I haven't been here for a while. Since the Fed released their FOMC statement on Wednesday, markets have been under a little bit of pressure. We've seen volatility spike up. VIX is sitting at around 20. Obviously gold prices come under quite a bit of pressure. They've given guidance that they're not going to be making any sudden moves. So this was a talking about FOMC meeting about interest rates. It's ridiculous. But what they're doing is they're communicating very, very clearly that they're going to make any sort of policy moves in terms of interest rates and so on very, very slowly, right? They also did give advance warning that, look, they are looking at increasing interest rates twice within the next 2 years, according to their dot plot. But for the most part, that's still very far away. I think what's sort of worrying markets is that they not only have to taper the asset purchase program that they're currently doing to the tune of around $120 billion a month. It's a lot of money. They're going to taper that down as well as do 2 interest rate hikes within the next 2 years, but they haven't really given guidance as to exactly how and when they're going to start. So what the market is, I'm guessing, mostly worried about is really just the pace at which they have to taper, right? Last time that there was a tapering of quantitative easing, the markets had a bit of a tantrum that was in fact called the taper tantrum. So this time around, market is a little, they're communicating a lot more clearly exactly, how far in future they're looking at starting, but at the same time, being relatively non-committal. Either way, this was enough to really kind of scare markets, and we've seen markets reacting very, very strongly to that. Just contextually, right? I mean, the market is down maybe 2% from the highs, so it feels very scary because there's a little bit of volatility. The markets come down a whole 1% and everybody sort of runs for the hills. Contextually, markets are still up very much from where they were a year ago. The trend is still very much intact. So even though there's a lot of volatility and excitement and news flow around it, it's not necessarily the world's biggest moves or news, right? In any case, looking at markets specifically today, the top 40 index currently down just over 1%. Resource 20 index down around 1.25%. Industrial 25 index just under 1.5% lower. Precious metals and mining index actually bounces back a little bit today. That's up around 0.75%. And then looking at the retailers index, it's down around 0.2%. Comparing that to the rest of the world, it's kind of red everywhere. The FTSE 100 index is down 1.75%. Germany, the DAX 1.8% lower. In France, the CAC 40 index is down 1.2%. In the US, currently the S&P 500 down around 0.9. Dow Jones Industrial Average down 1.3%. NASDAQ is down the least of the bunch, only 0.4% lower. So, markets are on the back foot, but by no means are they collapsing, right? So a lot of hot air really about relatively small things. I guess contextually, we'll see. This could be the beginning of something bigger. At this stage, it just sort of looks like a little bit of risk off going into the weekend, right? Commodity prices, the gold price relatively stable. It obviously had a very tough day on Wednesday and yesterday, although today is mostly unchanged, down 0.05%. So it's down like 90 cents. It's not really all that much. Trading currently at $1,773.85. It is somewhat probable, though, that given the fact that there is going to be no interest rate hike, that the interest rate or inflation hedge trade is potentially off the table for now, which could see gold price trading down all the way to sort of $1,650 in the coming week or two or months. We'll see. The base expectation is for gold to soften up a little bit at this stage. In any case, platinum price also relatively stable, up just over 0.1%, $1,057 a fine ounce. Energy prices recovering a bit. We did see Brent crude oil come down on the back of the FOMC news, but it is bouncing back. It's up almost 0.9% today, trading at $73.69 a barrel. Its counterpart in the US, West Texas Intermediate crude oil, is in fact up 1.4%. trading currently at $72.04 a barrel as that trades in Chicago. Currencies, this is really where the action is, to be honest with you. The Rand has fallen on its sword, I suppose is a good way to say it. 1.5% weaker versus the dollar today, trading at 14 Rand 28 at the moment. 1.1% weaker versus the euro at 16 Rand 95. And 0.8% weaker versus the pound at 19 Rand 75. So, or sorry, 19 Rand 74. So it's been a rough day for our market. It's been a rough sort of second half of the week, really, predominantly for the currency, right? I mean, we saw on the back of the FOMC minutes and the sort of statements and Q&A session that was held after that, the dollar index has really strengthened a lot. It's trading currently at 92.26, which is, the dollar index is kind of a measure of how strong the dollar is versus a basket of other international currencies. And the higher it goes, the stronger the dollar is relative to other currencies. So considering that last week it was trading just above 90, to move to 92.25, which is currently where it is, or 92.27, percentage-wise, that's a really, really big move, right? And that's where a lot of this Rand weakness, I think, is coming from, is from that dollar strength. It's basically people just saying, well, you know, I think in the medium term, if we look at this, I guess it still counts as short term, but if we look at this, I think this is going to play out. And I mean, I could be wrong, but I think that how this plays out is a lot of sort of fear and shock and all sorts of, you know, things that happen in the very short term. But if you follow the money, it's all flowing to the US. That's why the US currency is getting, you know, so much stronger. So it's going into Treasury, it's going to into the US market essentially. And I think in the coming weeks, the market is going to rationalize, well, hey, you know, free money continues to flow. Interest rates are still at, you know, between 0 and 0.25%. So essentially free to borrow money. You know, market conditions are still relatively bullish. And we see a continuation of our current uptrend. At least that's my anticipation at this stage. Time will tell.
Yeah, it's going to be interesting to see what happens. Unfortunately, Petri, time is against us with regards to the market updates. I know we want to do, of course, chat a little bit more with regards to the Federal Reserve meeting, but I know you told me off air there are going to be more discussions. So hopefully next week we'll have a chance to delve into what is currently happening with regards to the Federal Reserve meeting that took place this week. Petri, we say thank you so much for joining us again, and do enjoy the rest of your weekend. And of course, we'll see you again on Monday.
Thank you very much. Have a great day, and to all the viewers as well.
No, it's an absolute pleasure. There we go. PETRI Redingling-Hayes from Herenia Capital Advisors giving us a wrap of the market updates. Well, now it is time for our sports update.